It's been a week since the UK voted to leave the European Union. Global markets have been erratic, politicians falling on their swords, and Europe is taking a very hard line with any potential negotiations. In one of his strongest statements yet, US President Barack Obama has warned they may be worse ahead.
We're monitoring very carefully whether there's any systemic strains on the system, and so far what you've seen is reactions in the market, stock prices, currencies, but I think the preparations that were done by central banks and finance ministers, our Treasury Secretary, indicate the degree to which the global economy in the short run will hold steady. I think there are some genuine longer-term concerns about global growth if, in fact, Brexit goes through and that freezes the possibilities of investment in Great Britain or in Europe as a whole. At a time when global growth rates were weak already, this doesn't help.
Clear concern from Obama there, but investors seem to have shaken off some of that initial panic over the UK's vote to leave a week ago. Japan's Nikkei 225 has shown some more gains on Thursday, while London's FTSE 100 was once again in blue territory, but was showing lower gains than previous days. The British pound has failed, however, to join that bounce back and is still hovering below $1.40. And the potential impact on jobs is becoming clearer. For example, Vodafone says it's considering moving its global headquarters out of London. And Richard Branson, the founder of the Virgin Group, says one of his enterprises has cancelled a deal which would have created 3,000 jobs. And the UK's $24 billion nuclear project with French power utility Electricité de France has also been clouded in uncertainty. Well, Jane Foley is a senior foreign exchange strategist with Rabobank. She joins me live from London. Jane, good to see you. Now, we did see markets rebound a little bit over the last few days, but that relief rally does seem to be over. Why is that?
Well, of course, if you consider why there is relief in the market, there could be a number of reasons. It could just be markets were short. But of course, we know that central banks have been providing a lot of liquidity. And of course, that liquidity does go somewhere. So that certainly providing some support stock markets as well. Maybe they're finding some sort of bounce off the fact that government bond yields are just so low. So many different reasons why you could say there was a relief rally. But when you step back and look at the fundamentals, what we do have is a very divided government in the UK. We have an opposition party which really has been crumbling, and we have, of course, this big question mark over the UK economy. Now that too puts question marks over the outlook for the European economy, which in turn puts a question mark over global growth. So many huge uncertainties out there for investors, and as Obama said, it really is the medium term which people are trying with difficulty to forecast. And given the political fog, it's very difficult to see anything but potentially bad news.
How long do you think this volatility in the markets will continue?
Well, unfortunately for the UK economy, it could take a few months before we really get a political leader. Now, today, of course, we've had dramatic developments on that stage. We've had Boris Johnson pull back from the leadership campaign, a big surprise to many. And it seems that Theresa May is likely to be the front runner. But of course, we don't know that yet. And it is going to be early September before we know for sure who is the Prime Minister. Now, at that point, the Prime Minister will have to decide when to invoke the Lisbon Treaty and how the mucky divorce of pulling away from Europe will progress. But right now, as you heard Obama said, he said if Brexit goes through, there are still doubts out there about this process, whether or not the Lisbon Treaty will be invoked. And that doubt, I think, is another reason why we've seen some sort of relief in the market. And of course, as Theresa May said, there won't be a second referendum. It is also a reason why things could get worse, certainly for UK assets from this point.
We have seen banking stocks in particularly badly hit over the last few days in the UK and in Europe, yet we keep getting that message, or we have had that message in recent years, that the banks are better capitalized. So why are we seeing the banking stocks affected so much?
Well, if you think about the uncertainty that we have, the political uncertainty, the uncertainty about the economic outlook, particularly for the UK, then it's a fairly simple assumption to conclude that the banks are probably going to be doing less business, less M&A. There's some indications out that M&A activity will be reduced because investors are just uncertain about the political and the economic future in the UK and, of course, in Europe too. And then if you take the consumer point of view, well, we're beginning to see consumer confidence data showing quite sharp plunges already. Now, if that's the case, you're less likely to see the housing market activity progress at the rate it was at, and that means less mortgages, so less business for banks.
Okay, Jane, good to speak to you. Jane Foley there, a senior foreign exchange strategist from Rabobank in London. Well, the word that keeps getting thrown around when it comes to Brexit is uncertainty. And one part of the United Kingdom where that sense of uncertainty is particularly worrying is Northern Ireland, which shares the UK's only land border with the rest of the EU. While a majority of voters in England and Wales backed the decision to leave, Northern Ireland voted to remain. Duncan Crawford has been there to find out how the prospect of Brexit is going down.
The decision to leave the European Union is as much a leap into the unknown for Northern Ireland as it is on the mainland. The UK's divorce is expected to take at least 2 years. But once completed, this area will be the only land border between the United Kingdom and the EU.
Well, I'd like to see us remain within the EU. The people of Northern Ireland voted to remain. So we feel let down that we were sort of forced into this by the people of the UK.
The border has no markings, there are no controls between Northern Ireland over there and the Republic of Ireland, where I've just crossed into. But now the UK has voted for Brexit, there are doubts over whether this border will remain completely free and open. The history of Northern Ireland is dominated by periods of violence and sectarian hatred. And in the 1980s, the border was a heavily militarised zone with customs checks. Store manager Gerard McAvoy remembers the barriers of the past. He lives in the north but has sold goods in the Republic of Ireland for 27 years and tells me trade didn't always flow freely.
It was a lot more difficult bringing stuff into the country, like with the customs and everything. You'd have wasted a half a day sitting at the customs point there. If the border comes back, that's another. Apart from the business aspect of it, there's the whole political effects that it's going to have on the border areas, you know.
Being able to easily travel across the EU is worrying lots of people. The Post Office has seen a big rise in applications for Irish passports since the referendum.
Well, if I ever wanted to go and live or work or do anything in Europe, it would be much easier with an EEC passport as opposed to a British passport.
People say it's a knee-jerk reaction, things will settle down and be okay, but I'd like to make sure, doubly sure.
Republicans who want a united Ireland have now called for a poll on the issue, a move dismissed by unionists who want to stay part of the UK. Can the United Kingdom stay the United Kingdom?
Well, I mean, what are we saying here? This was a referendum for the whole of the United Kingdom. This wasn't a referendum to see how Northern Ireland felt it, or Scotland, or Wales, or England. Because if you take that analogy then, I think London probably voted also to stay. So is London leaving the United Kingdom too?
Questions about the future of the UK, and many about Northern Ireland's too, as the world waits for answers to the Brexit gamble. Duncan Crawford, TRT World, Belfast.
For more on this, John McGrane joins me now from Dublin. He's the Director General of the British-Irish Chamber of Commerce. John, many thanks for joining us today. Now, we've heard some stark predictions about what Brexit could mean for businesses, specifically in Northern Ireland. The former head of the WTO, Peter Sutherland, saying, and I quote here, that it would be an act of wanton destruction of Northern Ireland's economic viability. How concerned are you about the economic impact of a Brexit?
we're very concerned. We are an organisation at the British Irish Chamber of Commerce representing businesses with interests in the two islands. Our members employ over 2 million people. The trade between the two islands accounts for more than 1.2 billion euros every week. That's 60 billion euros a year. It supports directly 400,000 jobs, roughly equally divided on both islands, and many more in the supply chain. And the communities that those jobs support are very important. Northern Ireland is the most exposed province to any intervention in the free flow of trade and indeed people that a full-on Brexit might bring about. Although we're conscious that we're in very early days, it's not a time for alarmism, but it is a time for realism to say we need to know what sort of Brexit the Brexit people want, and then we need to go about securing the freedoms that currently exist to the maximum extent possible after all of that.
You are head of the Chamber of Commerce. I assume you've been speaking to individual businesses. What exactly have they been saying to you?
Well, the first thing businesses want to do is understand what the future holds. So we're in a climate of deep uncertainty. They understand that, but they want steps taken as soon as possible to remove that uncertainty. The politicians and public representatives involved now have to honour the democratic wish of the United Kingdom people, and they have to do business with the rest of Europe as to what terms are tenable between the entire nations of the European Union and a leaving United Kingdom. Businesses want to know what are the requests of the United Kingdom, because we don't know that. There are many different versions of leave, and nobody has drawn that together to tell us exactly what terms the United Kingdom wants. And then the question of how the European Union will respond to those requests will take at least probably a 2-year period, if not rather longer. And there are many uncertainties in political affairs along the way, which could get in the way of those trade discussions. So business is quite alarmed already. Irish exporting business has suffered a deep decline in the rate of exchange of sterling against the euro, and that effectively represents an immediate hit in income to those exporting firms. And then there are longer-term issues about making investment decisions for the future that might have been planned, that would create new business and new jobs for those communities. Those decisions are now all effectively on hold until some form of certainty about the future is restored.
OK, John, many thanks for your time. John McGrane there, Director General of the British Irish Chamber of Commerce.